Thank you for clicking. I'll make sure your time will not be wasted. Okay. So this video I'm creating for currency market. Okay, for the beginners specifically. So I'll try to make it as simple as I can. All right. So the FX market is nothing but buying and selling one country's currency versus another country's currencies. All right, that's it, nothing more. So let's start. Okay, so this is just a overview of a trader's journey. Okay, kind of like just an overview, and in depth we'll talk about as we go along. So initially what you do is just you go ahead and open a demo account with a broker. All right, so even if you are using the MT4, you don't have to even open trading account. Just go visit directly MT4 official website and download and just start practicing on demo account. Or else if you are trading if you prefer any another trading platform such as Ninja, CTrader, TradingView, there are other lots of trading platforms. So you can look at these as well. So initially, obviously, guys, you will not be trading on a real account or the cent account. You will be trading on the demo account for a good amount of time unless you build your own strategy. I mentioned that strategy in red color because that I'll talk about later on in detail about this, because the strategy and the psychology, these are the most important part in the journey of trading. Rest, these are nothing not so important. These are important though, but not that difficult to understand, right? And then once you're done with the strategy, you build your own trading methodology. Then you do the KYC and then deposit fund, and you are ready to go. All right, guys. So obviously this will take time and good amount of effort. Okay. So next we have here. Now I'll talk about the overview about the forex market. Okay, I mentioned here the stock market because we are not going to talk about the stock market. This is just for an example here, just to make you understand. So what happens in the stock market? So we have a trader here, and then we have a broker, because we cannot directly trade with the exchange. So there has to be a middleman, which is a broker here. And one thing, guys, you need to keep in mind that when I say the trader, I'm talking about the retail traders like us. Okay, we're not talking about the institutional level of traders or hedge funds. Okay, so just I'm talking about the retail level of traders. Okay, then exchange facilitate. Actually, exchange is the centralized part of almost all the country has their own exchanges. All right, so it's all about the centralized system in the stock market. Where in currency market we have a trader, then we have a broker, then we have LPs. LP stands for liquidity providers. Okay. These liquidity providers such as commercial bank, investment banks, central banks, sometimes big hedge funds, like institutional level of traders. These institutions, or these are the one, right, that creates the market volume, the huge amount of volume in the market. And again, it's not centralized, right, as you may be already aware about that. And then we'll talk about the why I like this market, because number one is liquidity, because this market runs 24/5 and big players here, and as you may be already aware that this is the biggest market in this world, somewhere around 6 to 7 trillion US dollar traded in a single day. All right, that's a very, very big. So that's why I don't think you will ever encounter liquidity problem. Okay, huge liquidity, guys. So any trading session you are planning to trade with, you will get a good amount of liquidity. And then number two, ease of access. When I said the ease of access, means it's online. Obviously, guys, even like you are trading crypto or stock, these also online. But when I said ease of access means since this is a biggest market in this world, so any content you want to know about the FX market, any strategy, any indicator, any kind of like the news, the information, you just search it on Google or this internet, you'll find tons of information available, and most of them are very good quality information you'll find there. Okay, and one more thing, that's stable. So when I said that when the stable means that the stability means, let's say if I were to buy a stock of a company named ABC, and due to XYZ reason ABC company files a bankruptcy, so my entire investment will be zero. But that is not the case in something with the currency market, because if I were to buy GBP JPY, these both are obviously like a major currency pair. So in order to be my position to be like the value of my position, only then it will be happen zero when the country goes to bankrupt, and I don't think that is not possible, guys, right? So that's why the stability is there, specifically for the major currency pairs. And then the trading session, okay, is very simple, guys. It's not very complex. It's very simple. Like it works 24/5. Early in the morning, session starts from Sydney, then goes to Tokyo, then London, then New York session. So New York session, before New York session closes, the Sydney session opens up, and it's keep on rounding like this. Okay, and yeah, based on the session to session, you will see the volatility sometimes very high, market volatility like ups and downs, sometimes very low, like choppy market. That also depends, like traders to traders. I have seen the most traders prefer to trade when the high volatility during like half Asian session, London session till New York session. But I also have seen some people prefer like a choppy market. They have built up their own strategy based on that. So it's totally up to you guys. So which market you are trading with. So you will come to know, and that the idea will come time, right? You need to obviously, guys, give some time and play with your practice on demo account trading platform. Then you will come to the nature of the market, right? How it works, on which time frame, on which day. And then we have now we are going to dig deeper, okay, about this market. So whenever we trade in currency market, okay, it has to be there a pair, okay, two currency. We cannot trade only with a single currency, right? So it has to be one pair versus another pair, all right? So because if we buy euro, then we have to sell USD at the same time, all right? So euro in this case called base currency, USD called quote currency, okay? So remember, there has to be always one pair of a currency. Excuse me, guys. And then in like in the Forex, we have lot size, the contract size. That there are three kind of sizes we have. The first one is standard lot, which is 100,000 units of a base currency, which is 1.00. This 1.00 when you like go to MT4 or any trading platform, you will see this is the lot size of it. 1.00 means the one standard lot. And then mini lot, 10,000 units of base currency. 1.010 make micro lot. This is the smallest lot in this like currency market, which is 0.01. Okay, so there is one more kind of lots available or not, but that's the different type of trading account, which is the cent account, which we will talk later on, which also very good for like a practice account. So it doesn't mean that you have to trade with all these three kind of let's say large sizes. You can increase it, decrease it. Let's say if you want to trade the 2 micro lot, you just manually enter there 0.02 and it will be 2 micro lot. Alright, guys. And then we have margin and leverage. Okay, so well, margin This is the, again, you can say the good part or the minus part with the forex, because we have a huge margin here. Typically, if you talk about the stock market, we have only 1-to-1, all right, or like 3-4, but maximum I've seen like 10-to-1 in the stock market. But the currency market, we have a huge margin given by the broker side. So what exactly the margin and leverage, we will understand very quickly. Okay, no need to go to dig deeper. All right. So if you have 1-to-1 margin and you traded the amount you are going to trade with the 100,000 US dollar, so the necessary margin is the amount which you have in your account, right? The deposited amount, it has to be the same amount, because you've got no leverage, right? 1-to-1 means there is no leverage. Whatever amount you are going to trade with, you have to deposit entire that amount. Okay, the second example, if you got 2-to-1 leverage, then it will be half. Okay, so whatever amount you are going to trade with, because since 50% is given by your broker and 50% is something you need to deposit by your own, so it will become 50,000. Okay, so on and so forth. You can just calculate simply, right? It's a very simple calculation. But it is already always advisable, guys, do not go with the higher leverage. That leverage, if you are correct, the high leverage will obviously give you the huge amount of profit, but it can also be against you if you are not correct, and market goes against you, then it can wipe out your entire account, or hit your stop loss accordingly. Okay, so it is always advisable, guys, just try to open a trading account with as less leverage as you can. All right, so and then we have, swap. The swap charges, a forex swap rate rollover is defined as the overnight interest added. It's written there, right? It's very, because the swap charges, what happens, guys, swap charges is decided by the central bank's interest rate. Okay, so take an example, one side is euro and USD. If I shorted this pair, euro USD, so what I'm doing, I'm shorting, I'm hoping that euro will go down versus the US dollar, and US dollar will go up. Okay, that's what. And then now that will depend on the specific date, how much was the interest rate by the central bank of I think ECB, because the euro, the currency is euro, and the versus US dollar, how much was the interest rate by the Fed, which is USD. Okay, that is calculated, and that either it will be credited to your account or it will be deducted from your account. Okay, the swap charges. And but obviously, guys, when you, in the reality, when you're going to trade, all right, you will not actually focus much on the swap charges, because there is nothing in your hand. The swap charges is decided by the central banks. Okay, so there is nothing you can do, but you will not be trading based on the swap, but you will be trading based on your own strategy, right? If your strategy says you need to hold this position for a week, then you will you will hold that position for a week, right? You will not cut the position thinking that swap charges may apply if you open the position overnight, right? But this is good to know information. All right, and we have then the spread and commission. Yeah, this is again the kind of important thing, guys, here, because the spread and commission, the spread actually normally this charge is taken by the LPs, as you know. Do you remember, as we talked earlier, the liquidity providers, and the commission is charged by the broker. Okay, and some broker I have seen they mix up both the things like this. You will say only one charge in the trading platform, the commission and spread, they mix up and they show to you, they give to you, right? But most of ECN brokers, if you go with, they will see the spread is separate and the commission will be separate, which is fixed, and the spread is dynamic, because the spread, it has to be dynamic, because spread is not fixed thing, right? How much is spread? What is exactly spread means? The difference between buying and selling price is the spread. Okay, so let's say here the bid price here 1.20000, the ask price 1.20005. So there is a difference of how many 0.5 pips difference, right? So whatever difference, this difference is called spread. And how much spread would be a specific given period of time in a specific given currency pair, that depends based on the how much the buyers or sellers are there for a specific currency pair, how much volume there, volatility, that depends. All right. So it is keep on changing. This is not a fix, guys. Okay. And this is the bid price. When you say the bid price, bid means you are going to buy, ask means you are going to sell. So when you say bid price, you will not get this price, guys. The bid price, always you will get this sell price. And when you ask selling, you will get this price. Because if but why? Because this is the difference, guys. The charged by the broker, or it goes to the LPs. This is their like the way of earning, one way of earning, right? So if you were to buy at this price and you were to selling at this price, considering there is no volatility, not a fraction of people movement in the market, if you, let's say, if you buy at this price and selling at this price, so without, you just taking profit. And this is not something going to happen, guys, because you will always buy at high price and always will sell at lower price. Now, guys, we'll talk about the types of orders which we do have in trading platforms. There are two types of orders: market orders and pending orders. The market orders are these are the orders, whatever the price at present currently on the market, the order will execute it at that price. Okay, if the market is, let's say, 1.12345, you either buy or sell, your order will be placed at the same price. Okay, and we do have other types of order, that's pending orders. We have four types, like buy stop, sell stop. Let's say you, based on your analysis, you decide that the price will go above, right? So the current price which they are in the market currently, the buy stop order will place a buy order from the few points, the point which you would be specified there, but that will not be the current price. Okay, buy stop and sell stop. Buy stop meaning, it's very simple, guys. So the buy stop means that you are going to place a pending orders for the later, which will be executed when the price will reach at that level. All right, so let's say 10 pips, 40, 30 pips above, and or in terms of sell, the few pips below. All right, how much pips would that be? That completely based on your trading strategy analysis. Okay? And we also have here buy limit, sell limit. So as written there, it's very simple. Let's say the market is at this price, 1 by 1, 2, 3, 4, 5, and you observe that based on your own strategy, you observe that the price still will fall from this price. Okay, and the moment it will reach at the specific level, at their level, that point you will place a buy order. And vice versa with the sell limit, when the price will go a little bit higher than this, then your orders for the sell will be executed, or hopefully the market will reverses back. Okay, so these are the type of orders you can practice on demo account, guys. It's just very simple. It will take only just 1, 2, 3, 4, 5 minutes to understand. Okay, and then we have here pip. Okay, so the in the currency it is called the value. The moment you see, the tick 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 tick, price goes ups and downs, at the value it is calculated in pip. So after decimal, okay, we have 1, 2, 3, 4, 5 digits, right? So there are two kinds of brokers in our market. Some forex brokers, some are 4-digit brokers, and most of them these days are 5 digits broker. Okay, so the fourth decimal is called pip, and the fifth decimal is called a pipette. All right, 10 pipettes equals to 1 pip. All right, so 1 pip is the value, and 10 pipette makes 1 pip. So if you are a kind of interested in algo trading, semi or fully automated trading, and you are interested to code, the programming. So in that case, you need to be very, very careful while coding your program. So the digits, you need to be very, very careful. If the specific currency pair has a 5-digit after decimal or 4-digit, or is it 4-digit broker or 5-digit brokers, or let's say there are like one currency that is Japanese yen. If Japanese yen is added there, that it wouldn't be 5-digit, okay? There would be less than 5-digit based on the currency pair. But most of the currency pair, it will be 5-digit after decimal, okay? That's all about the pip. And then we have currency pairs. All right, so as I talked earlier, it has to be two currency there. So these are called major currency pairs, okay? So major currency pairs where the USD is involved. That's the euro, dollar Japanese yen, pound versus dollar. Like these are the major currency pairs where you see the good amount of volatility, the movement, okay? And these are in the middle. It is called the minor pairs. Minor pairs means the US dollar is not involved. Okay, the Euro GBP, pound versus or Japanese yen, New Zealand JPY. So these are the minor pairs. That doesn't mean that you will not get the trade opportunity in this period. Yes, you do. But compared to the major pairs, the volatility and the volume a little bit less in minor pairs. But obviously, you also get the good amounts of trade opportunity in these pairs as well. And we have third one here, the exotic pairs. Means that the pairs, one side of this pair, or like the currency of developing emerging like countries, currency like Hong Kong and Singapore dollar, right? And obviously there's the less liquidity, but definitely you may also get the good amount of trade opportunity in these pairs as well. It's not only that this is the pair, there are lots of other pairs, like there are dozens of pairs, okay? So these are just an example of the currency pairs. And now here I'm going to going through, right, just a overview. This is the candle formation. So you see here, this is called bearish candle because actually guys, this is the bullish candle, guys, but mistakenly I painted here by red color. Normally red color represents the bullish candle, and the green candle represents bullish actually, and the red represents the bearish candle. But again, it's up to your choice, like whatever color you want to give it, so you can give it. So it's actually the bullish candle because it was open here at this point, and this is the lowest of the candle, and this is the highest, and then this is the point where the specific candle for the specific time frame was closed, and this is the entire body. So the candle means if you set the time frame for 1 minute, this is the 1 minute candle, okay? If you set for the day one, this would be day one candle, and same with this one. This is the bearish candle because it was open here, okay, and then closes here at the bottom. This is the lowest of this candle for this specific timeline. All right, and now here we'll talk about the types of analysis. All right, guys. So there are mainly two kind of analysis in any market, not only about in forex market. So one is technical analysis, another one is the fundamental analysis. Technical analysis means you will be heavily relying on the indicators or the chart patterns or the candlestick patterns, price action, which you will see on the trading platform chart, okay? And you will not focus much about fundamental analysis. At the same time, other side, the fundamental the people, the traders who based on fundamental analysis, they actually look at the micro economy, the kind of economy, what's going on, the news, and the policy of the country, specific to which country's policy would be good or bad for the long term, short term period, in the coming time. So these sort of fundamental analysis. And normally guys, and some traders do use both the things, technical as well as fundamental at the same time. You will come to know later on. And this is the kind of news trading some I mentioned there in red color, because it's very risky. And initially guys, because you will be trading on the demo account, definitely you can try any kind of analysis, any kind of news strategy. Alright, so that's not a problem at all in the demo account, because that will be virtual amount, except everything will be real, almost real. Okay, real market. So the news trading, I have made a separate video. I'll make sure that the link will be available down description on this video. Okay, you can check there, and then you can go through the how you can get the opportunity of trade during the news trading. So normally I would like to mention here guys, if any strategy normally you have developed, so avoid trading during the news, right before or right after the news, because at the time you will see sometimes very huge high volatility and hundreds of 50 pips of movement in a fraction of seconds. Okay, so what happens, based on my own experience, so even if you set the stop loss, sometimes that doesn't the system doesn't hit the stop loss where it's supposed to be, but after many pips, because there's huge movement in a fraction of time. Okay, so here the type of traders, how many type of traders are there. The very first one is the position trader. The position traders are the traders who actually takes weeks and days and months to analyze the market, to get the opportunity to get in the trade, and they are not in rush at all. Once they are in the trade, and they normally hold that position for weeks and months, right, for 3 months, 6 months, something like that. And then we have a swing trader. Swing trader kind of very much kind of position trader, but they are the swing trader means like a little bit less the timeline, they hold their position for days and weeks again. Okay, and then we have a day trader. Day trader means it's very simple, right? The day trader means the trading early in the morning or afternoon and closing the trade on the same day. Day trader means doesn't mean that all the position has to be closed on the same day, but means that most of the trades, their goal actually, their target only for the short-term profits. They are really not care about what would be the economy after months or years. That's not, these things are not relevant for them. They are just looking for the opportunity for the single day. But yeah, if there is any specific news, a news event is coming in which may impact in the market, okay, yeah, that's in, they only look those sort of newses, because that's that may impact their trading very in a huge way. And then we have a scalper. I like scalping very much. Now we'll talk about the types of analysis, guys. This is very important, because based on the analysis you will be either buying or selling. All right, so mainly we have two kind of analysis here. One is fundamental and another one is technical. All right, so fundamental analysis is something where you look at the policy of the country and the news events which will impact for long term. Okay, and basically what is all going on around around you on the market, of the government policy and everything like that. Whereas the technical analysis, these kind of traders rely heavily on the chart, the indicators, the chart patterns, price action, right? These are tools. They really do not much care about what is the policy or something like that. So guys, but I also seen that some people mix both the things, technical as well as that fundamental analysis, and after that they come into the point. So be either they are long or short for the specific currency pair. And then we have here the news trading, guys, boom, in the red color, because what I marked painted in red color, guys, because this is very dangerous, because there is you will see news news events like the NFP news or the any news. There are platforms where you can see, like, you can just Google it and you will see the lots of the sources where you can see the live outcome of the news, whether is it in red or the green or the good or bad. Based on that, the specific currency pair, the volatility moves somewhere around a huge movement like this, in a fraction of seconds. So it's like a very risky, but as you will be trading on the demo accounts, guys, so there is nothing to worry about, because it's just a virtual amount, right? You can test any kind of strategy, because the amount will be virtual, except everything will be real, almost real. All right, so I have made a separate video about the news trading, which I will make sure the link will be given in the description below. You can check that. Okay, and then obviously, guys, again, once you are comfortable in demo trading, once you are very aware of the the minus point plus point of the news trading, okay, then only you will be doing trading, the news trading. And then we have a kind of traders. How many kind of traders are there? The very first, the position trader. These types of traders are they are in no rush at all. Okay, they have huge patience, and they look for the opportunity for they can wait for days and weeks and months until they get the right direction, the pattern, okay, on the chart. So once they are getting the trade, they hold that position for weeks and months, all right, for long period of time. And then we have a swing trader. The swing trader, very much kind of position trader, but the swing trader look for the little bit less, they don't hold their position for that long. And then we have a day trader. Day trader means just holding position, opening position same day and closing same day. Not necessarily all the position have to be closed all the same day. Some trades, may stay for a few days, and some trades may close within a fraction of seconds, few minutes, something like that. But the motto, the main the focus of a day trader is for the short period of time. They are really they really do not care about what will be the government's policy for next quarter or for next month. They are only looking for the short period of the opportunity. And then finally we have a scalper. I like scalping very much, guys. The scalper is just grab the opportunity quickly, just few pips, okay, and that's enough. For the scalper, guys, I would request you, please open account with ECN broker with a very tight spread, because you will be, if you are a scalper, you will be trading let's say good amount of quantity every day, right? It's not something like positional swing trader. Even they do have a little bit huge spread and commission. So even though that would matter, but not that much as will impact on the scalper, because the positional swing trader may take 3, 4, 5, 10 trades in a month, something like that. But the scalper maybe a 10, 20, 30, 40 trades in a single day. Maybe I've done that, but that would be a kind of disaster. That's not good at all. But the scalper, compared to other position swing and day trader, scalper trades very frequently. So the spread is and commission, these are the very important part for them. Okay. And now trading platform, guys. Okay. So before you choose a trading platform, as I mentioned earlier in this video, there are we have many trading platforms. Some are individual, such as and some are specific broker. Some broker have their own trading platform, which are not available anywhere with another broker. But some trading platforms are very common, which you will be you may find with almost all the brokers. So if you are a manual trader, kind of as I mentioned earlier, swing or position trader, and you do not rely you do not you are not a kind of automated trader, semi-automated trader, and you are not a scalper. You do not need that much of indicators, something like that. You just a manual trader. Your strategy based on price action and like a very basic tools such as MACD, Fibonacci, the moving averages, MACD, like a those things, right? So you don't even no need to consider, you don't have to be worried about the trading platforms, because these basic indicators, something like this, will be is available with all the trading platforms. Okay, so that's for if you are like a manual and if you are a trader. So there is nothing too much to look about the trading platform, because what will happen, you will place either buy order, seller pending orders, something like that, and the take profit and the stop loss, trading stop loss. These basic functionality will be available with all the trading platforms, right? This is basic functionality. However, if you are like interested in automated trading, semi-automated trading, and getting you like you want to use the like advanced tools, right, for your analysis, then definitely guys you need to uh, like consider which trading platform you will be working on, because that's the trading platform is the one you will be putting your good amount of time, right? So choose accordingly. And then guys, so not finally, but this is the very important part. Okay, very important part. How it is important, I'll explain here. Okay, so what is this? The basic means whatever I talked so far in this video, almost these are the basic things. Like you need to open a brokerage account, you need to deposit funds, you need to trade the trading platform, right? These are the basic things. There is nothing much, and which I talked about the pips. Obviously guys, the pip value will be there and the currency pair will be there. These are the I would say like the fixed things, right? Fixed means there is no changes. All right, it has to be brokered, then there has to be brokered. If there is LP, there has to be LP, right? There is no if and else. And these are the entire, let's say we calculate percentage wise, it's almost 100%, right? And out of 100%, the basic is just, let's say, maximum 5 to 10%, which is not tough at all. You can even like you can learn these things just within a days. It even won't take that much of a long time. These are the very basic things. Okay, not difficult at all. And then it comes the strategy and the risk management, guys. Somewhere around 40% out of 100%. What is the strategy? Because it takes good amount of time to build a strategy. So it's not the difficulty building a strategy, guys. Applying that strategy, that is the most important. It has to be in your blood. You have to believe on a strategy if you have developed once. Okay, so initially you can search anything, like you just Google it and YouTube and ask with your friends, and you just keep on searching. But there will be one point you will have to develop your own strategy. You cannot keep on searching for entire life, right? There will be one point you will have to develop your own strategy. Be it you develop by your own, it was given by somebody, okay, or you mixed two strategy to one strategy and you applied your own rule there. But the point is, you have to believe on that strategy. Okay, after testing a long period of time, let's say weeks and months on demo account, and then it has to be in your blood circulation. But once you completed your strategy, there shouldn't be like what will happen if this, what will happen if that, right? No, that will not work, guys, because that, I don't think that will help you at all. And the risk management, guys, within that strategy, the risk management, meaning that the accept the losses. Okay, if some position are going into loss, you have to cut there. Okay, and when you will cut, that totally depends on the risk appetite you have currently based on your strategy. but you cannot win all the time, guys, because if there is a strategy which gives you winning ratio 50 to 60, let's say 40 loss and 60 winning, okay, that is also good if you proper following that strategy, guys. There is no I mean say there is no no lack of strategy in the market, guys. Even if you use a simple, like, the by default indicators on the trading platforms, and if you search it on the internet, if somebody free of cost has given, as I mentioned, the strategy, and you follow that, that even that strategy will give you the profit, okay. And I myself has like have made few videos earlier. You can go ahead, and because I will talk about one of the strategies I developed, that the daily candle breakout strategy, where you, what happens to, this is the candle, this is the next candle, it breaks this candle breaks, okay, the higher up, this candle breaks higher up this candle, you buy. If the breaks low, then you sell. You can deeply go there and like look at that. That also may give you the good amount of profit, but the problem is the people don't have patience, and they don't believe, they just watch and just forget, they are just keep on searching something like that holy grail, which I've been doing since long, guys. That is nothing like that. The main point here is, the whatever strategy you finalize, you need to believe on that, okay. So now we talked about 40%. 10% was somewhere on the basic, 40% was the strategy, risk management. Now greed and fear, fear means the psychology. So you developed your strategy, guys, right now, but very, very, very important to stick on that rule, these rules. There will be no benefit of developing strategy for over the period of long time if you do not constantly follow the rule of your own strategy. If your strategy, after a long period of backtesting, it gave you a good amount of result, but the later on it was let's say giving you loss in months, like weeks and then months, then there has to be something wrong with that strategy. Maybe then you may need to think all over again and then make changes accordingly. Otherwise, if you, let's say, if there was some bad days, okay, and then you change your mind, if there was the one already placed and it was going into loss, and you are not ready to accept your loss, but your strategy says it has to be a stop loss there somewhere, but you're not taking loss because thinking that it may reverse, right? Something like this. That is called psychology. The greed and the fear. The greed to get more, and the fear, no, I don't want to lose at all. I will win. Something like this, guys. So this is the old, right? If you, the basic is nothing like, basic you can add. It's just a matter of days you will learn, and the strategy is a matter of maybe I've seen people that some took few months, some took years, some still struggling, okay. And the greed and fear, like this psychology, I don't think, guys, anybody can teach you. I can guide you, that anybody can control on your psychology. It's only you need to control on yourself, okay. And on the next we'll talk about just give you the overview of the trading platform of MT4. Okay. So this is a MT4. As I mentioned earlier, we have many type of trading. There are many trading platforms. This is one of them, MT4, and you see here, this is the menu bar here, and this one is called the Market Watch, where you get tradable assets, all the assets available by the broker. It will be appear here, and whatever trader asset you want to trade, analyze or trade, just drag here. It will be appear here in this section, And the bottom of this is called the navigator. This is the section of the indicators, the by default, or whatever you install the indicators will be appear here. And below that you use the expert advisor. So any expert advisor you attach installed in the MT4 will be shown here, and below that is a script. Okay, so this script is something, it works only once. You drag and drop here, so it will do work whatever it is designed for only once, and then it will disappear from the chart. It's not like an expert advisor which is placed on the chart once, so it will keep on doing. It will not disappear automatically until unless it is coded in that way, or we do that manually. Okay, and another, we have like a difference of like tools here for the analysis market. And let's see this. I was talking about, this is the sell price and the buy price. You see the difference, 403, 406. So there is a difference of 0.3 pips. Okay, 3 pips. You remember, 10 pips means 1 pip. So this is the like a 5-digit broker. You can see here, right? Sorry, no, this is Japanese pair. So because then, as I mentioned, there is Japanese pair. There after the dot there will be only 3 digits. We will select any another pair. Let's say Aussie Japanese yen. No, again Aussie Japanese yen, Aussie Canadian dollar. Okay. So this is the 5-digit broker, guys. After dot one, you can see here 1 2 3 4 5. So the difference, whatever difference you see here, 90962, 9096.8. So it's kind of like only 2 pips, right? It's not even 1 pip. The 10 pips equals to 1 pip. So very tight spread. And commission, I believe, will be there, because the spread is taken. The spread comes from the LPs, okay, the liquidity providers. The commission is added by the broker. I will show you one second. So let's say, I was talking about, this is the 1.00. This is the standard lot, $100,000 US. Okay, and if you, let's say, if you want to trade a half standard lot, just type in 0.50 is 0.50. So this is half standard lot. If you want to trade with a, let's say, a half mini lot, 0.05, right? This is the half mini lot. Okay, so let's say we'll sell it. All right, just a demo account, guys. There is no issue at all. So I just place an order without any analysis. Okay, so commission, there is no commission. If there was any commission, it would be appeared here. And swap charge, as I talked earlier, it will be appeared here, but not now. It will be, or it would be kind of overnight charge. If I hold my position for overnight, then it will be charged. Okay, next day it will be shown here. And this is the equity, the margin, how much margin, that depends on the leverage, as I already calculated earlier. All right. And guys, this is the candle formation. Now currently this is in hour 1 candle. Okay, if we can switch over to daily candle, right? So this is the candle. Like, let's take an example of this candle. This is the bearish candle. It was opened here, and then closes is what closed at this point. This is the point of high, the higher wick of this candle for the particular day, and this is the bottom of this candle. All right, so you got loss of like a trading analysis here. Okay, like let's say pivot point, you drag the pivot point here. You see here the pivot point also is a very, very useful tools, guys. Many institutional level traders, professional traders also look at these levels. These are the very key point levels, right? You see here the price keep on just rejecting. This is at this point, right? So let's take an example. At this point it was rejecting. It was like this here. So these are the levels of the pivot. What is the pivot level? You can see the different video I have created on about this. These are the levels. This is not the only indicator I would recommend, but this is one of the indicators. Just an example. Okay, so you've got lots of indicators. You've got parabolic SR, MACD, something like that. This is the MACD. Okay, You just figure it out. Okay, so whatever you're comfortable with, you can build on the strategy based on that. So guys, that's all about this. Okay, so I hope this video was informative for you guys. Let's see you on the next video.